What's going on, everyone? In this video, we're going to be doing the weekly recap of the stocked up trading floor, looking at the market over the past week. It was definitely a little bit more choppy than usual, which made for less explosive moves in the options market. But either way, with that being said, let's jump right into this week's recap. So there were no new hybrid plays or swing plays, but there were a handful of surge alerts throughout the week. There weren't any like crazy moves in either direction, and even in the market as a whole. But with that being said, there were a handful of plays that moved in an okay way. Amazon and Zoom moved up in decent ways on Friday, but again, they definitely weren't anything crazy. And then an Nvidia play earlier in the week moved up a little bit, but it was definitely a slower week and a tougher week to trade, no matter which way you look at it. And while that sucks, that's just sometimes how trading is, and it's just more so how you manage those weeks and how you continue, because choppy weeks are unable to be avoided in the market. Some weeks there's a bunch of opportunity and we see multiple options pop up by hundreds to thousands of percent, while other weeks it's slower, choppier, and hard to trade. But again, that's how trading is sometimes. Looking at the market for this week, we are very close to all-time highs. We have a Jerome Powell speech, inflation data, and a handful of earnings set to report that can definitely bring in some craziness in the options market, which would definitely bring upon more opportunities and just better movement. But I definitely look forward to that. But as usual, as I've been saying for I don't even know how many years now, consider selling to open put options if you don't already do that. It is one of the best strategies in the market when done correctly. Essentially, you take a stock that you wouldn't mind owning, and then you sell puts at a strike price you are fine owning that stock at. And essentially what happens is you get paid to potentially buy that stock at that strike price. And essentially what's happening over long periods of time is you're getting paid to buy a stock you like at a price you like. So in the worst case scenario where you get assigned shares of that stock, it's a win-win, and then you can sell calls against it, and it's just a very good strategy over the long term. Most people don't try this out because it doesn't have the potential for 700% gains, but it's very consistent, and when you set it up in the correct way, it is very advantageous, and time decay is working for you rather than against you, because you are selling to open the option rather than buying to open it. If you are curious about selling put options and you have questions about them, feel free to tag Tom, Hunter, or myself, and we can definitely help you out. But besides that, thank you all so much for watching, and let's have a great week.